Hey, it's Jed Wonderly with Noble Home Loans, and I'm back with the fourth of 5 videos in the top 5 things you need to know when investing in real estate. Now, we've already covered how to buy an investment property with 5% down. We've also already covered the leverage multiplier. I'll say as a side note on the leverage multiplier that it's very important to re-leverage yourself every 5 to 7 years, just depending on how much appreciation you've had. If you've had some years of really good appreciation, like we've had this year in Salt Lake City, it's important to know when you kind of hit that sweet spot, because the more appreciation you get, the smaller your leverage multiplier is going to be. And one of the great things about real estate investing is leverage, so you want to take advantage of that to make sure that you're maximizing your wealth creation. The third video that we talked about were the 3 ways that you make money by investing in real estate. And again, we were talking about investing in real estate that you're going to rent out to somebody and then collect rental income. You get the appreciation and of course depreciation as well. So video number 4 talks about the ability to defer capital gains when you do sell your real estate investment property and want to re-leverage that. So hopefully you're seeing a bit of a theme here that there are some great tax benefits when it comes to real estate investing. And one of those is the ability to defer capital gains. Now let's say that you had a non-retirement investment account with Fidelity Investments or TD Ameritrade or whoever you might have your investment account with. And let's say you bought 100 shares of Google. Google stock price goes through the roof, in one day on the earnings announcement, because everybody is just stoked for what they see the future to be and what the past quarter just had the results were, and so they decide to sell. They had 100 shares, and let's say that the stock price went up $100 in one day. That's a $10,000 gain. They sell, and if the capital gains rate is 20%, they're going to pay $2,000 in taxes on that $10,000 gain. There's no way for them to defer them unless they have done it in a retirement account. But we're talking about a non-retirement account. So with real estate, let's say that you bought a $200,000 house and you took that house, you bought it as an investment property, or you did it like what I talked about in the first video. You bought a move-up home, and so now you converted your what was your primary residence into an investment property, and over the years you get a bunch of appreciation. And let's say you bought it for $200,000, you sold it for $250,000. Now you've got $50,000 in capital gains that you might have to pay taxes on unless you know how to defer those. Well, with real estate, there's something called a 1031 exchange, and if you do it right, you can go ahead and take all those capital gains, all the proceeds from the sale, both, and the capital gains is the only part that's going to be taxable typically. Now, capital gains are going to be enhanced by the amount that you've depreciated your home as well, but even then, you don't have to worry about capital gains if you converted your home and are taking advantage of the 2 and 5 home sale gain exclusion rule. But let's say you didn't sell your home that you converted within that 3 years from the day that you moved out. Let's say you kept it an extra year or 2 because you wanted an extra little appreciation on that home, or the timing wasn't just right to sell, or maybe the person that was buying your home was late on closing, and now you closed 5 days late, you missed that cutoff, and bam, now you're paying capital gains tax. Well, if you properly utilize a 1031 exchange, you can take all that money and invest it into other real estate properties. It has to be real estate of greater value than what you're selling, and you have to invest all of it. Any money that you keep out is going to be subject to capital gains. Now, again, I would also consult with a CPA so that they can help you in maximizing your tax benefits. But this is, again, just one more way that makes real estate such a great investment. I'll look forward to seeing you in video number 5. Take care and have a great day.